Overall, we've gotten back to the October 10th breakout point high, and that is good for the bears. Good for the bears, increases the odds that the market is going to go, increases the odds that eventually we're going to get back down here, but we may have to go sideways for several bars first. 2 legs down, so the bulls have a rally and then a 2-legged pullback, but we're right at important support. And I guess overall, part of my concern, while we are at support, we don't have a decent buy signal bar, and even if we pull back, there still might be sellers somewhere above. So it'll be interesting to see what we get over the next few days. Will the market continue to go lower, or will we bounce? I suspect we'll probably get the bounce, but really not what you want to see if you're hoping for a strong rally. Bears making money selling above bars, and that lowers the probability. Lowers the probability that the rally is going to continue. Weekly chart, getting really close to that high one buy, the buy signal bar over here, and I suspect we'll probably get it. The bears, they're hoping that this week will form a 2-bar reversal, with last week and this week being the entry bar. That would increase the odds of a second leg down. And then 5-minute chart, the market formed a relatively large gap down in an opening reversal. First bar of the day, bear bar closing on its low. Strong enough bar that we'll probably get at least a small second leg down. But because the gap is so large, it increases the odds that we're going to get some kind of a pullback. And then 2, with 2 being a doji with a fairly big tail above the bar, that increases the odds that there is probably, that increases the odds that we may find buyers below 2, and the best the bears can get is a small second leg down, with the market being so far away. Plus we're at support, the October 10th high. That makes me think buyers in this general area. And then 3, we got the surprise, strong enough bar on 3 that the odds are we're probably going to go at least a little bit higher. And then 4, follow through, probably buy the close, expecting at least a second leg. 5, bull bar closing on its high. Good for the bulls, increases the odds that traders will buy and scale in lower. And then 6 consecutive bull bars, 5 and 6, probably buy the close and buy a pullback. 7, another bull bar, good for the bulls. Now we have 6 consecutive bull bars in a micro channel, and that increases the odds that we're going to get a pullback soon. And then we pulled back on 8, buyers below 7, still probably going to get a small second leg and test of the 11 low. I meant to say test of the 13 low. And then 9, outside up. Now we have consecutive outside bars, but probably a second leg up after the rally up to bar 7. And then 10, getting a breakout of the consecutive outside bars, probably going to go a little bit higher. And then pause on 11, probably buyers below. 12, second leg up. We're starting to stall near this line. And that increases the odds, especially with the gap down being large, that the bulls may get a fairly deep pullback. And then 13, we triggered the sell below 12, but found buyers. Not a great sell signal bar below 12. Probably going to go a little bit higher. And then 14, bull bar closing near its high, but right at the moving average, probably limited upside. 15, bear reversal bar closing on its low. Probably going to get a couple of legs sideways to down, but probably a minor reversal. The bears, they're hoping this is a test of the breakout point, and then we get a reversal down. Consecutive bear bars, 15, 16. Good for the bears, increases the odds that we get a second leg down. 17, more follow through. Probably sell the close and sell the pullback, betting on a second leg. 18, another bear bar, but tail below the bar after a fairly strong rally, entering a support zone. Probably buyers down here in a bounce. 19, bull bar, but probably sellers after 4 consecutive bear bars and a second leg. we got second leg down 20, 21. Not a good buy above 21, so probably going to go at least a little bit lower. And then 22, bear bar closing on its low. However, probably buyers below the bar and at least a small bounce, but the channel down is fairly tight because we're entering a support level, big up, big down. There's probably buyers in this general area and we may bounce. But even if we bounce, I suspect there's sellers somewhere above. Bull bar 24, good for the bulls. We may get a small second leg, pause 25, and then we got a second leg up 26. But you're testing resistance. This is probably tight enough that we're probably going to form a lower high and attempt to get at least a second leg. Bear bar 27, not a great sell below 27. However, it's not a great buy above 27 either. And then we broke to the downside 28. Enough of a breakout bar that we may get a second leg down. Traders want a breakout of this overall trading range, but forcing bears to sell at the bottom of the range, we may get a deep pullback. And then 29, bull bar closing on its high after consecutive bear bars lowers the probability for the bulls. Plus 29 is forcing bulls to buy just under the moving average. That also lowers the probability. So probably sellers above, but strong enough bar we may get a second leg up. And then you can see we tested down to the 28 close, found buyers and reversed up. But now we've sold off, rallied, sold off, rallied. If we sell off again, it's double top. Bear bar 31, closing on its low, good for the bears. We may try and get trend resumption down. In other words, we have a breakout trading range. We may try and get trend resumption. 31, 32 consecutive bear bars increases the odds we get a second leg down. And then 33, now we have 3 consecutive bear bars. 31, 32, 33, probably sellers above in a second leg. And then 34, bear bar, surprise closing on its low, increases the odds that we're going to go lower. Enough of a surprise that I suspect we're probably going to find buyers in this general area and we'll probably get a bounce. But strong enough selling that I suspect there's sellers on a pullback. 35, bull bar closing on its high, probably going to get at least a second leg up, but the second leg may not come in until the bottom third of the bar. This is forcing bulls to buy relatively high. And then we paused on 38, weak low one short, probably buyers below, but tight bear channel or tight sell off. The buyers may not come in until near the close of 34. Follow through 37, good for the bears, but not a strong follow through bar, but not a great buy above 37. More follow through 38. So it looks like we're going to go a little bit lower, but probably buyers near the bottom third of 35. And then 3 consecutive bear bars to 36, to 30, 39, probably buyers below, and then 40, reversal up. Bulls who bought the close of 35, scaling in lower, getting out break even. And then 41, reversal bar closing on its low, probably buyers below, scaling in lower. And I suspect there's probably buyers around the 35 low. 42 consecutive bear bars, 41, 42, second leg down likely, 43, more follow through selling, increases the odds that there's, while we still may get a second leg down, I still think buyers below. 44, 4 consecutive bear bars, but probably buyers. And then 45, we have a bull bar, but a micro channel, so we may need a third leg down, leg 1, leg 2, then maybe leg 3. And then we have surprise 46. However, not all that great of a bar. It's an outside bar late in the sell-off, increases the odds of disappointment, and that's what happened on the very next bar, 47. 47, bull bar, closed under the midpoint, probably buyers below. And then we got a second leg down, 48. And you can see we started to go sideways to down, and then we got the surprise, 51. 51, strong enough reversal up. We're probably going to get a couple of legs up at a minimum, and I think we'll test the 35 high. And then bad follow through 52, but a low one short after consecutive sell climaxes here, 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 and even down here. Probably buyers below 52. Second leg up 53. Good for the bulls. Probably going to go at least a little bit higher. And then we got the doji 54, but I suspect buyers and a bounce. And then 55, bull bar, but a parabolic wedge, 1, 2, 3, probably sellers in this general location. Reversal down 56, strong enough bar will probably get a second leg down. But even if we get a second leg down, I think buyers below 51, but a strong enough surprise, it's probably, first reversal up is probably going to be minor. 57, bull bar, but probably sellers above. And the bears, they got a small second leg up after 50. The bulls got a small second leg up after 57. We had a weak low 158, so buyers below, but probably sellers above and sellers near the 55 high. And that's why we got the bear bar 60, 60, 2 legs up for the bears, rally, pullback, second leg up, double top 55. Bears want a bear breakout below the neckline 57 and a measured move down. Breakout, strong enough bar will probably get at least a small second leg. We got the small second, we got another leg down with this bar right here. 61 sold off, pulled back, intra-bar, and then 62 sold off lower, but probably buyers below 62 and 51. 63 follow through selling, but a doji increases the odds of buyers in this general location. And then a low one short 64, but probably buyers below. And then the market bounced with 65, 66, and 67. So it looks like we're going to test back up to this overall range. And you can see we pretty much went sideways into the close. We didn't quite get up to 35, but as I mentioned, 60% of the time you typically test up to these previous highs. 80% of the time you buy here, you buy more above a bull bar, you can get out break even. So certainly if a bull bought here and bought anywhere lower, they were able to avoid a loss. Even if they bought the 35 high and more below 35, even at the low of 35, they could have still probably broken even on the trade. For stop orders, probably buyers on above 3, buyers above 4, buyers above 5, 6, 7, and even buyers above 9 or 10. But late in the rally, near resistance, yesterday's high, this line right here, and the moving average, not ideal. And then I thought reasonable to exit longs below 15. So bears can sell 15, they can sell 16. Betting on a second leg down, they can sell below 31 or 32, betting on a bear breakout of the tight trading range and some kind of measured move. Tested the bar too high. Bulls, bears can get out above 35. But what do they do if they get out above 35? Maybe they sell again below 41, but I think pretty tough. I don't know how many traders would sell again below 37 or 38 when the odds favor at least a small second leg, which the bulls got on 40 and 41. But, maybe okay to sell below 41 or 42. But I think still a little bit challenging. And then bulls, if you're buy above 35, you probably get out below 41 unless you can use the wide stop scale in. Bears, if they're short, I think they certainly get out during 51 or even earlier if they understand the context. Consecutive sell climaxes, wedge bottom. So we have leg 1, leg 2, leg 3, and then the third leg subdivides into 3 legs. I think it's reasonable to get out above any bar. So get out above 50 if you're short. Definitely during 51 or above 51, bulls can buy. But then when they have 3 legs up to 55, I think it's okay to get out below 55 or below 56 or above on a pullback. Or you can get out below 60. And the opposite, if you don't get out there, what do you do down here? I think if you're long, you buy more below 51. You don't exit below 51. And so that makes it difficult for stop entries because you're in a trading range. Typically, when the market is at one extreme, it's typically better to do the opposite. So once the market's clearly bullish, it's better to look to sell. When the market's clearly bearish, it's better to look to buy. And that's because it's not really all that bearish. Here, 62, 63, it's easy to look at it as being bearish, but really it's a sell vacuum test of support. And that's why I found buyers up here. So this is really not good for stop orders. Limit orders, probably buyers below 7, buyers below 8 or 9. And I thought sellers above 12 during 13 or 14, probably sellers above 18, and sellers probably above 25 for a second leg down. I thought sellers, that's kind of tough. There's probably sellers above 34, but after this big bull bar, you're probably going to get a second leg up. And then I thought buyers below 35 scaling in lower. I thought buyers below 46, buyers below 47 down here for a bounce. And then I thought probably sellers above 57, sellers above 58 for a second leg down. Definitely buyers below 62, 63, 64, or even 51 anywhere down here scaling in lower for a bounce. I thought probably buyers below 70 scaling in for a bounce, and then probably sellers above for a second leg down. And then buy the close, sell the close. Probably buy the close 3, 4, 5, 6, 7. Buy the pullback. Sell the close 16, 17, 18 for a second leg down. Probably sell the close 33 or sell the pullback, but tough to do when you see 35. And then I thought anywhere down here is more buy the close and sell the close. And that's probably it. Really from bars, maybe 42 onwards, it's better to do the opposite. When you see 2 or 3 bars down, it's better to look to buy. When you see 2 or 3 legs up or bars up, it's better to look to sell. Let me take a look at questions. Okay, someone said, you sometimes say that most traders should look to short if you're under the moving average for 20 or more bars. Would you say it's okay to take the long from bar 3 to bar 15? Yeah, I see what you're saying. So basically, we're under the moving average. Is it still okay to buy 3, 4, 5, 6, 7, 8, 9? Yeah, it's great to buy any of these. The problem, the whole saying, when the market's mostly below the moving average, only look to sell. When it's mostly above, only look to buy. That's assuming that, it's what you don't want to see is price being really far below the moving average. You want to see that something like, let's find an example. Something like this, where you just have a lot of bars holding above the moving average. Or even better, something like this, lots of bars above the moving average. Even here, lots of bars holding below, but that's still tough. The ideal gold standard, if you will, is some sort of small pullback environment. Kind of like this. So we have a sell climax and a rally, and you look back and think, wow, we've been above the moving average for 20 bars. Probably going to continue to go sideways to up for a while, and we did for a couple of legs. And then we started to go sideways. But when you see price be really far below average, that's not what you want to see, because it increases the risk that whatever reversal up you get might just be a test of the moving average here. But far from the moving average, certainly okay to buy. Okay, is a tight trading range from bar 54? Is it a tight trading range? Sure. Yes. Tight trading range all through here. So why should we buy below 54? Well, I said there's buyers below 54. So I guess the question is more or less along the lines, why did you think there's buyers below 54 if we're in a tight trading range? That's because I thought we were much closer to support than resistance. We've been selling off for, a number of legs, and therefore there's probably buyers at a new low of the day. So traders, if they're long on 54, the reality is some will get out and look to buy lower. Others will just trade small enough and buy more lower. So if you bought 54 anywhere in here and you just bought more lower, you made money. And 51, it's even more of an example. 51 is a strong enough bar that there's probably buyers below 51 in its consecutive sell climaxes. And because of that, I thought the bulls had a really good shot at getting up to 35. So it's one of those windows where you can buy the pullback, and you're probably going to get a second leg. Okay, why is 35 a magnet today? You kept saying the market was going to try and go there. It's a strong buy signal bar. Every one of these buy reversal attempts increases the odds that it's going to be successful. So if you buy 24, let's say there's you pick 50% chance it works. Well, this probability is going to be slightly higher, and then this one's going to be slightly higher, and this one's going to be slightly higher. Channels evolve into trading ranges. And by definition, in order for a bear channel to evolve into a trading range, it's got to get an upside breakout. And because of that, if it's going to get an upside breakout, that means prior buy signal bars have to get retested. So that's the logic. When you see a strong buy signal bar, late, especially in a trading range, usually it gets retested. Let me see if a few more questions here. Okay, why are you targeting resistance around bar 35? Well, I just talked about that. So overall, what do I think is going to happen over the next few days? I think, just look at a 60-minute chart. We've had a trading range, bear breakout, second leg down, but lots of, pretty big bull bar. This makes me think that we're probably going to get a bounce. So as far as tomorrow, I think the lower probability event would be getting another gap down and a sell-off. So the odds of tomorrow being another strong bull bar a bear bar on the daily chart, I think are lower probability. More likely, we're going to get something disappointing. But we'll see. All right. Thanks, everybody. And I hope everyone has a great rest of their day. And I will talk to everybody fairly soon.